All right, let's get right into it here. Looks like market is up about 0.3% on the S&P. Nasdaq is also up about 0.8%. Semiconductor continues to make a move here, 2.2%, led by AMD, close to 10% positive. SMCI is up 6% today. And so as you can see, this market continues to march higher. However, we got some crypto mining stocks down quite a bit. Riot is down 10%, CLSK down 8%, Mara is down about 16%. Let's stick with S&P 500 ETF. Spider! 65-minute chart. Here, so this is where we close yesterday. As you can see right there, that's where we close. And we actually saw that gap up in the morning. That's actually sizable up gap. I think it would have really helped the buyers if that gap would have sustained, and if it was never filled, that would have really kind of keep that momentum going, at least in the micro term. What happened was on the second hour, we did see that fade back down, and that gap was filled. And so that vicinity, the gap area coinciding with my micro term, you see my micro term moving average, which has been acting as support since Tuesday. So, since Wednesday. So as you can see, yesterday, right? So as you can see, this morning we gap up, it fades, it comes down to that micro term here. As you can see, not able to break below the micro term.
Perfect.
So you see that even on the third hour, this is third hour price action right here. Even on the third hour, though we did see that lower wick here, but it did not close. On that third hour, it did not close underneath the micro terms. Bears were not able to reclaim that micro term. Bears are actually, bulls being very adamant about making sure that price stays afloat above the micro term. That's what I think bulls had a chance to gap it up, brought it back down. Still micro term acting as support. That's third hour, fourth hour, fifth hour, and then on the last hour ramp here. I mean, this thing looked full-blown bullish ramp just few minutes before close. So it got up here and did tag that all-time high level. Intraday basis, however, it faded back down very, very quickly, and we do have what it looks like a shooting star candle there with the long upper wick. So this shooting star candle is pretty long, which has a similar properties as to this kind of a gravestone doji, right? Long upper wick. But you also have to understand these kind of, you know what I'm saying, these shooting star candles, these sort of reversal candles that so many people like to quickly get into conclusion. Without the follow through, it really means absolutely nothing, because we did see a shooting star candle right here. You see that? That's a shooting star. There's a little bit of lower wick here, but definitely longer upper wick. Definitely qualifies for a shooting star candle, right? What happened was it never really, we didn't see that follow through, right? So we did see a shooting star, but next day we didn't see a follow through to the downside. What happened was we saw another high wave doji, and then we gapped up. And then we threw technically more like a gravestone doji candle there, and then we start to see a follow through. You see, start to see that continuation to the downside. So this shooting star, it's gonna mean absolutely nothing without the follow through. Because even here, you can see on the fifth hour today, that looks like a shooting star as well. Again, no follow through, right? So without the follow through, this means absolutely nothing. If we do see a continuation to the upside, because we came right back down to this level here, where it closed on the first hour today, well, where it opened, right? So it basically came back down to where it opened after the gap up. And that's where we closed. It chose to close underneath. So that's the current resistance there, about 508 or so. And so obviously bears are looking for a follow through to the downside. If we do see a follow through to the downside, then this shooting star is gonna be in play. Then there are a couple levels you wanna keep an eye on. Is my micro term here at 506.32, and then my short term coming up here at 504.89. Let's check out that oscillator. So as you can see, I'm gonna zoom out here because I think because we want to understand overall, not just what happened like last 3 minutes, because that candle really all happened on the last 3 minutes of a trading session today, right? What's really important is though the overall sentiment. Going back to, you can see I'm going all the way back to February here, late January. So that's the low, right? With the oscillator crossing up after it hits oversold. That's a low there. That's low there. And that hit the low there.
Perfect.
And that oscillator doesn't quite look as confident. You see the angle of this thing. You see the angle of that. You see the angle of this. But this thing is sort of like not really stretching to the upside. It's sort of leaning here. So obviously we're not seeing very confident move. We're seeing sort of skittish move here as we, you know what I'm saying? I think this is a level where market wants to market found that oversold level. We found move right on that micro term here. But again, we're not seeing sort of that smooth rally that we've seen before, like here. I mean, there was like a 1 day of little pullback. And then here, we're seeing sort of chop, right? We chopped for first 2 days of this week. A little bit of shenanigan this morning, right? Because we gapped up and faded. So that oscillator is kind of letting us know that this move is not as confident. That does not mean that this oscillator can start making a move from here. But this is a level where if that shooting star plays a role here, and if we do see a follow through to the downside tomorrow morning, at least first 2 hours, then that oscillator can whipsaw back down. And if we do see that oscillator whipsawing back down in the middle of the band, that's gonna be pretty bearish.
Huh?
So we have to understand, we both do need to keep that oscillator going all the way to the top of its band. You cannot allow that oscillator to curl back down in the middle of the band, because see when the oscillator goes up and pulls back down in the middle of the band and then it gets back up, you see another leg higher, right? That's how it works in an uptrend. But when the downtrend is sort of ready to be established, and I'm talking in terms of like a short term here, short to mid-term, keep in mind. So when the downtrend, short to mid-term downtrend is about to be established, what bears need to do is basically bears need to mirror this, invert it. So invert this. So basically what bears need to do is gotta do that and then bring this back down and then do that, right? And have that oscillator kind of, you know what I'm saying? Have that oscillator start oscillating at the bottom of its band, something like this, right? You see how while the bulls made this run up, that oscillator was elevated, right?
Perfect.
So if the bears want to make any kind of leg lower, let's say, to fill those up gap right here, they need to see that oscillator staying down and mopping the floor. So this is sort of a vulnerable stage for buyers. So it'll be extremely important how the market plays out tomorrow. And then we might have a clear direction, at least for the first week of March going into next week. I'm gonna come back for you. We'll reassess the situation Enjoy your evening. Go trading tomorrow.